Hello, stock market learners. Welcome to another Market Edge video by Vivek Bajaj. I hope you guys are doing good and taking care of yourself. If you are an active market participant, I'm sure you must be wondering what is happening in the market. Well, as a market participant for last 20 years, I have seen there everything like this. It happens. Market will give you money sometimes, market will not give you money sometimes. You have to accept it and you have to constantly be in the market and make sure your learning curve is always there. Again, one of the videos from me, and this time we are going to talk about one of the strategies which can be used by people who have probably a bit larger capital or people who are trading derivatives, right? Because derivatives is a zero-sum game. A lot of people lose money and only few people make money, and those who make money are resourceful in terms of capital, resourceful in terms of network, resourceful in terms of knowledge. So I'll share with you one of the strategy which I have been using, and I'm sure you will also use it. We have made it very simple for you to use, very effective, and this is more relevant for people who are trading futures. Okay, I don't know whether you trade futures or not, but there's no harm in learning this because you can actually use this for your cash market positions. Only the difference is in futures we can do both long and short. You can buy as well as you can sell. Whereas in cash market, you can only buy, you cannot do short selling. That's the only difference. Otherwise, strategy can be used in both the asset class. So let's go. Let's discuss. The strategy is, in StockEdge, if you go to analytics, there's something called FNO zone. Very interesting paper. FNO zone is basically a segment where derivatives, futures and options which are traded in the exchange is penned down, and you can do your analysis on those instruments which are listed in futures and options and equity market. Okay. Now, if you look at this derivative analytics, you see there is a filter here. Okay. The filter talks about aggressive new long, aggressive new short, aggressive long covering, aggressive short covering, right? Looks technical. No, it's very simple. Let's talk about new long first. What is new long? When open interest goes up, price also goes up. For example, say Reliance. If open interest in Reliance futures contract goes up and the price of Reliance contract also goes up, means resourceful people have bought Reliance. All right, let's take some real life examples. Let's go to new long and see. All right, so we have APL Apollo. The price is up by 0.7%. So it has gone up. Open interest has gone up by 8%. It's cumulative open interest. That means it combines the open interest of all 3-month expiry. In equity, there are 3-month expiry. So, say for example, abhi July hai, to July, August, September, all three combined will give you combined open interest. Why relevance of combined interest? Because whenever one expiry is happening, one contract is getting expired, the position gets rolled over to the next month. If you don't look at the cumulative open interest, you will have a perception that, oh my God, open interest is reducing in the current month. But actually, the open interest is getting carried forward in the next month. So cumulative open interest takes care of any rollover effect which can happen in open interest. So price going up, open interest going up, it's a good sign for the stock. Will the stock go up? Possibly it can go up. Possibly it may not go up. But yes, it is an indication that it's a good sign for the stock. If I change this new long to only new short, that means price is gone down. Now 0.2%, these are not down. These are okay. But 1% price going down and open interest going up. How is it possible? It is possible because in derivatives, you can short the stock and build short position. Not possible in cash market because cash market you need delivery to short. But in open interest, in derivatives, it is possible that you short and you build open interest. So open interest going up and price is going down. This is bad for the stock. Possibly the stock may see some kind of a negative trend. Are you there with me, everyone? Yeah, good. You're very intelligent. Just say in comment window, yes, present, sir. Say present, sir, so that we know that you are present in this class. Okay. So New long, new short, now you understood. What is this aggressive new long? What is the definition of aggressive new long? There is no textbook definition of aggressive new long. It is a definition which I have given. I believe that any stock where open interest has also gone up and delivery is also high, volume is also high, that means there is some serious buying happening because the buying is supported in both segment, cash market as well as future. So Amber, 4.6%, 75% increase in open interest, amazing. And volume has gone up by 7x, delivery has gone up by 5x. There's something which is happening in this stock which is of my interest. VBL, Tata Chemical, look at this. All these stocks have something which is inside which I should know. I hope you understand this. Similarly, if you look at aggressive new short, same. When delivery is high, open interest is going up, price is going down. That means this stock is definitely in a bad shape. Are you there with me? Yeah, good. Let's go. Aggressive long covering. What is it? Aggressive long covering is the long position is getting covered. Open interest is going down. Price is going down because it's a long covering. Price going down and delivery is going up. That means there is someone who is squaring up the long trade and also giving delivery. Aggressive short covering. That means someone who has short the position, build up a cumulative open interest of short, reducing the position, price going up, delivery also going up. That means there is something good happening in this stock which is leading to shorts squaring up their trade in both cash market as well as futures market. Now, I hope this is absolutely clear with all of you, the various category of open interests. Now, how do I trade? How do I build my position? Now, let's go to more sane thing like aggressive new long, which I feel is sane, but all of them are very relevant. I do give very high importance to delivery because delivery is critical. It gives you a confirmation that if Y is happening in futures and cash market also something exciting is happening, it's good for the market. Now let's see a stock called Tata Chemical. Okay, just randomly look at Tata Chemical. Okay, now this is a day-wise presentation of this data. I think probably StockEdge is the only platform which does such a phenomenal work in combining cash market, derivative and mutual funds together and present you in a very comprehensible manner. So look at this Tata Chemical, okay? How does it look like? New long, a bit of long covering happened here, new short happened, long covering happened, aggressive new long happened. So basically it's a mix of position. From 972 it came to 946, then 941, then 934, and now the position is 1000 is the price, the position has gone up. So this is a long position stock. Can I just look at this and trade the market? No, you can't do that. We cannot just trade based on this information. This information is a filter which will help us to take a decision whether we want to take this stock or not. The way to trade is go to the score and see, okay, 1 month score is positive, 3 month score is positive, 6 month score is positive. Yes, I need to be buyer in this stock. All right, now let's see the chart. Let's see the chart. Where is the chart? Let's see the chart. Oh, wow. That's beautiful. RS is positive. There is enough volume. This is a 20 period moving average. It's also positive. Good for this stock. So will you be a buyer in this stock? Yes, I will be buyer. But I will also check the industry, whether there is enough strength in the industry. How do you do that? Go to the industry here and see the breadth. What is the breadth showing? Oh, this is long-term breadth is positive, but short-term is kind of negative. In fact, short-term, the whole market is kind of negative. But yes, the industry is not, everyone in the industry is not performing. Only Tata Chemical is performing. So I will be mindful. Actually, I'll be very, very confident in the stock where industry is also showing positive breadth and the stock is also showing positive breadth. So let's figure out some other stock. Tata Chemical is good. Let's go to Amber. Let's see. Amber, how is it going? Cumulative open interest has really skyrocketed. So there is something very exciting has happened in this stock. Let's see the score. Let's see the score. Where is the score? Yeah. Oh, wow. Beautiful. Oh, my God. This looks like a Absolutely amazing. The peak, in fact, it may be probably overbought. It has really stretched too much. Now let's go to industry and see if there is a positive breadth in the industry. How do you do that? Just go to the industry here and see the breadth. What do you see here? Okay, this is nice. 50-day moving average is green, but again, a longer tail is positive, better than the Tata chemical industry, right? This has better structure. So we will probably focus here, and I'll look at the chart. Let's see the chart of Amber. Let's see the chart. Similar kind of a chart structure. Because industry is more positive in this, I'll probably bet on this than in Tata Chemical. Just as an example, say stock market is all about elimination. You study this, then you study this, you feel, this is not good. This, then this. You finally arrive at 5, 6, 10 stocks where you would like to take your first step. The first step should always be small step. You cannot take first step like this, right? The first step should also be always be like this, the baby step. And then you build your pace of trading. That means you start with a small quantity here so that if the accident is there, you are protected. You just lose small money. Okay. Now let's see some other stock. Let's go. Okay, VBL. Okay, let's see. Varun Beverage. What's there in store for us? 4 lakh. This was the number of contracts. They have reached same number of contract. Price was 485, 512. That means the whole movement, probably the short positions were squared up here and the new long positions have come. So good. It's a long stock. Let's see the score. Good. This score is also good. Interesting. See the long tail. This is still yellow. It is not green. That means even if the stock goes up, the impetus of hugely going up is still lacking. Once it comes into the green zone, the stock will fly. Okay. Let's see the price chart. Let's see the chart. Similar kind of a structure, except that RS has just become 0. I think this stock has a better risk reward ratio because it has started emerging. Now let's go to the industry and see the market breadth. Consumer food. What is the market breadth right now in this? Still green. I mean, it's yellow, but the long tail is still better. So I will probably go with which one? Amber, because Amber has a better industry structure support. Okay, this is all long. Okay, this is all long. Now, ideally, if you are an active market participant, you also want a short position, right? So let's go to aggressive new short. Let's see Axis Bank short. Okay, let's see, go inside the chart part. Okay, let's see the score. Is the score negative? Wow, perfect. This is a perfect candidate to go short. I have no problem, but it's risky. I mean, you go long in one future and you go short in the other future so that your market risk actually gets nullified. Now, let's look at the industry. Industry private bank. How's the breadth of private banks? It's positive. So I should be very careful. I should not go aggressive in shorting Axis Bank because the whole industry structure is actually positive right now, although the stock is negative. Let's see the other one. HAL, the defense baby. Let's see the score. HAL, what is the score? Negative. Oh, good. It can be a short candidate for a short term. Let's look at the prices. Let's look at the industry breadth. Okay, where's the industry breadth? All right, defense. Let's see the industry breadth. I think it should be negative only. Oh, it's negative. This is a good stock to try short position because the industry itself is underperforming and the stock also, because of its structure, it looks like the stock has kind of a short position. There's a new short. You see long cover, new short, long cover. Clearly, it looks like that someone is okay to exit the stock or go short in this stock. You can actually do a future OI analysis like this as well. You will see this. The OI is going up. The price from 4758 has gone down to 450. That means they're fairly large number of how much? Let's see. This was 93 lakh and this is 98 lakh. That means almost 5 lakh new short position has been added in this stock, which is supported by our score and obviously the price behavior. Let's see the price behavior finally, whether it supports the short. Yes, it supports the short as well. So I will probably go long in Amber and go short in HAL because of the structure of the chart. I will keep individual stop losses for both the trades. Remember, when you are trading, stop loss is your friend. You have to keep stop loss. The moment there is a one stop loss which gets triggered, you immediately find another stock which could be shorted, because as a prudent practice, you should always be net zero. Long here, short here, net zero, so that your market risk is absolutely zero. This strategy is a high risk strategy. Okay, it's morely relevant for people who have more risk appetite and more capital, and who are more vigilant with their position. This is not for people who are investors and who believe in just buy and hold or whatever. In fact, it is not for momentum investor. It is actually strategy relevant for swing traders or people who have, at least are subconsciously, who are active in market. I hope this was useful. I hope you'll start using StockEdge for this and try karke dekho. I mean, it's always good to try new things and see whether it works with you. Try with one lot on both sides, 2 stocks long, 2 stocks shorts, and see whether this is something which excites you and you want to take it as your important strategy. All right, thank you so much ये वीडियो देखने के लिए. जय हिंद, टेक केयर.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.